Hello, everyone. Good afternoon, and welcome to our midday update for Tuesday, February the 7th of 2017. This is George Papazov, owner, founder, and head trader here at Trade Pro Academy. Been trading since about 2001 and loving it. You need to know who you're kind of listening to on the other end of the microphone. I want to remind you guys it's 1 week away from Valentine's Day. Gentlemen, mark that on your calendar and do not disappoint this year. Let's talk about the markets. I want to remind you that the information in this presentation is for educational purposes, not constant investment advice. The risk of trading markets can be substantial. You should carefully consider for engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. Okay, today I want to tell you guys that we're in danger of something happening here in the market that a lot of retail traders don't know about and are going to completely get caught off guard when it happens. And I'm not going to say I told you so because that's mean. I only say I told you so when things go well, not when they go bad. Because even if you're making money as the market tanks, it's not a good sign for 90% of people. So you can't celebrate. You can celebrate your wins, go for it, but don't rub it in. That's the worst. You got to have some sportsmanship. All right, hold on a second. I'm going to shut down the trade floor because I just keep getting messages. And it's going to keep popping up. And some of them are sometimes they're private. Okay, let's talk about the market and what's happening today. We'll talk about this giant wealth transfer that's underway that I believe has a lot of implications for your potential retirement accounts, for your potential trading. I don't want to scare the crap out of you today, but I'm going to present the picture and you decide for yourself. All right, here's the equity market still camping around this 2296 level. So we're seeing some buyers come back in on these dips. We're hanging around all-time highs. The Dow today hit an all-time high. All right, we also had a JOLTS report today, a job openings report, and it was slightly softer than expected, but not a big implication. Okay, the job market remains strong, as Janet says, on the headline number, but underneath it's deteriorating a little bit at a time, and it has been since 09. All right, let's talk about a few other markets. Oil. We talked about oil yesterday. We got short at 53.63. We're still holding that trade, making really good money on the oil position. Not huge money, but good money. Okay, so it's coming down to the support at some point. You're going to have to expect oil below these 52s to either find support again and trade back up to the 53s or just smash its 52 level. Sellers keep pressing on those bids, take it 51 very quick. Okay, if it goes 51, you should expect some kind of slowdown. Ultimately, I think for this oil move, we could get 48 to 49. I know it sounds nuts right here, but when we get there in a few days, you're going to say, well, George, wow, it hit that. That's what I'm looking at. Okay, so I'm going to continue to short oil. I'm going to continue to stay short. There's an opportunity there. You have to take profits on the way down. You can't get too greedy, however. Okay, this time it's different. I can tell you that much. This kind of sell-off day, depending on how much volume we close off with, but we already have about 70% of the volume of the day, and the afternoon session hasn't even come yet. Towards the 2:30 pit close on oil Eastern time, we'll see a lot of the volume come out, and then we'll find out if we can hold below these 52s. So the short trade is the right trade for oil, but don't short it here. If you aren't in it already, it's too late. Wait for some rallies to short into. You've missed the short trade if you haven't gotten in yet. Don't chase this thing. Okay, the only people that chase markets are the ones that lose in the markets. Don't chase it. If it's low, let it keep going without you. All right? There's millions of flights that take off around the world every day. Can you be on all the flights? They're all going to exciting destinations that you may not have been to. Can you get on all the flights? No, you can't. Same thing with these trades. 51.95, below 52, keep selling. Target for this is 48 to 49 for a long term. On the way, you're going to have blips and rallies. This slice lower feels different. I don't know if you guys agree, but it feels different. We'll talk about the shift in wealth in a second. I want to just do a quick recap of markets. This sell-off got absorbed once, twice, 3 times. The 4th time, I think we go through. We have enough longs accumulated at these levels. 1, 2, 3, 4. We have enough longs that if we break, they're going to puke on sell stops, and stop loss are going to be wiped. I think talking about stop losses for currency traders, I don't know if you guys heard FXCM, very popular brokerage, just got slapped a $7 million fine by the CFTC for doing what? For trading against their clients. I love how currency traders think that they're actually trading the market. You're not trading the market. The market is here. Interbanks trade the market. Unless you got an ECN, the brokerage that connects you directly to the open market, you're not trading the market. Where you're trading is an offshoot of the market. You have a company here like FXCM that has a brokerage account that says they connect you to the market, and they have many clients. What do? They amalgamate all these clients into one order and send it out to the market. So if this guy wants to buy, this one wants to sell, they're matched and paired off and neutralized to zero. What did FXCM get charged for? Trading against their clients. What does that mean? Think about what a broker has access to in the currency market. Every client's limits, every client's sell stops, buy stops, and anything in between. So they know where your stops are. They amalgamate this position and take a trade against you because they know majority of retail traders lose, especially in FX. The burnout and loss ratio in FX among new traders is the highest. It's the most difficult market to conquer successfully because there's a lot of algos and chop, a lot of head fakes, whipsaws, and they know how to play with your emotion. So what I'm saying is, one second. We had an oil squawk here. All right, that's the FX market in a nutshell. That's what they're getting charged with. Be careful. If you're trading currency, I'd recommend a company like Interactive Brokers or anyone that's an ECN, which connects you directly to the market and doesn't trade against their clients. Ask your broker, do you trade against my position? If I'm long and so are 80% of your clients, will you take a short trade against us? That question, see how they answer. And you can uncover a lot about the motives on the side. That's a side piece I want to do. It's over. I'm not going to talk about that anymore. Okay, oil's weak. Equity markets are holding highs. Dollar's kind of trying to rally a little bit. Gold has exploded higher. We've been long gold since about 1209. We get long here. We made some really good money in a very quick span of time. Bonds are starting to rally as well, or continuing the rally. So what you're seeing is risk on assets, bonds higher. Okay, 10 and 30 years higher. Gold higher, which is a risk on asset. Dollar index perceived as a risk on asset higher. Risk asset, which is oil, lower. S&P 500 holding the high. Something's got to give here. Look at this. NASDAQ did not place a new high. Dow Jones did not place a new high. Russell hasn't even been able to really climb above this mid-range and hold it. NASDAQ, however, on fresh record highs. So watch for these four equity markets. They'll give you an indication of what's going to happen. And I'll talk to you about the wealth transfer trade in 1 second. Let's look at breadth. Here's breadth. You can see that from a perspective of shorter term stocks, this is the percentage of stocks that are trading above their 50-day moving average. We've broken below the 70 and we continue lower. This could start to pull the market down. If we continue lower and lower, the internals are going to start to give out. That's kind of like a race car flying down the track and suddenly you lose one cylinder on your 8-cylinder motor. All right, you're still going to chug along. Now you lose the second cylinder. Now you only got 6. You're going to start to notice the power. You're going to start to decelerate. That's what this does. You're losing cylinders on this upside trade. 1% of stocks above 100 can't crack the 70, and I think they're going to head lower too. I think what's happening, and this is a good time to talk about it, is a massive wealth transfer trade. And I'm gonna kind of give a few minutes for this. Be patient. I'm not going to make it a rant, but I do want to show you something super important. If you go under, let me open another template for you. Price trading. Where is it? It's my price analysis. Here we go. Let me show you the S&P 500 since 2009. There's a saying in our business that says, don't confuse bulls for brains. Because in 2009, all you had to do was throw a dart at a board, choose 3 letters, and buy that stock, and you would have made a ton of money since then. It really becomes difficult, or you're tested as a trader and investor when a period like this happens. Do you lose all your money that you made in an up market? If so, you're probably like the majority of the retail crowd. If you manage to break even and get some protection and not get clobbered, you're doing good. If you manage to actually get out and make some money on the downside, you're doing amazing. All right, well, guess what, guys? We're in the middle of this trend right now. We're starting to decelerate. There's some cracks in the ice starting to show. And I think since 2009, about 2017, that's an 8-year rally. And the market might be poised for a drop. Look at this thing. From 2002 to when? 2000, and when the selling really started happening, about 2008. All right, that's about a 7.5-year cycle. Okay, let's go back from here, from this boom. 1994 to about, let me see, hold on. Where's the last real big sell-off? You'd have to actually take it from here. 87 to 2000. So that's a little bit of a longer cycle. But the real acceleration started from 94 to about 2001 or so, about 6 years. So you can see every 6 to 8 years on average, after a massive up market, stocks get slammed. Huge up market, stocks get slammed. Huge up market, and nobody wants to believe that that's a possibility that stocks get slammed. But the more we stay in this upward market, the more likely we are for this correction. I'm going to tell you something that people don't like to hear. What happens on the upside? Traders know this. Professional traders know this. It's easier to accumulate a massive long than it is to get out of one. Why? When markets are going up, you can always find enough buyers on the dips. And when it's going up, you'll always find somebody willing to buy into what you're selling. What happens, and the reason drops are so violent, is if you have a long trade and the markets start to drop, and if it gets really panicky and it moves quick, why does it drop so quick? Because the bids disappear. All right, you might have a massive position, but if nobody wants to buy it, guess what? The price is going to continue to sink until somebody wants to buy it. That's why markets move so volatile. So what I'm saying is, right now, we're trapped in a record long position. Look at this. S&P 500 futures, 1.4 million contracts on the asset and institutional manager side. All right, the majority of them are probably almost 2-to-1 long to short ratio. They're cutting their shorts as of last week. They're adding to their long positions. What's the hedge fund side of the business doing? They've removed their shorts. They've cut their shorts, and they're starting to add to longs. They've got another 1 to 3 weeks. It could stretch a little bit beyond that. But when you see hedge funds cutting their short positions, basically saying, I'm going to short the market. Oh, I lost. I'm going to short the market. Oh, I lost. I'm going to short the market. Oh, I lost. They're going to throw in the towel and say, you know what? F this thing. I'm going to buy the market. And when shorts buy the market and when longs are already long, guess what you got? You got a crowded trade. You got everybody piled in the market. If everyone's in a market, and it blows my mind how many people don't get this dynamic. If everyone's in the market, where's the money going to come from for people to buy to continue pushing prices higher? Where? Nowhere. If you got everyone that's a buyer already, if they've already bought, guess what they now become? They now become active sellers. If everyone's in a trade and they're long, they're now active sellers. Active sellers do what? They panic very quickly. And if everyone's long a position and the market starts going down, they're all going to jump in and rush for the exit at the same time. Sell, sell, sell. It's going to get frantic. Who's buying it? Nobody, because they don't have cash. They're all in equity. So now you got to find prices low enough that new money flows into the market. That's the dynamic we're under right now. So I'm saying there's a wealth transfer in place, and this is what it's going to look like. What the institutional money is doing right now is holding the market high. Market comes down, they'll find a level, they'll start bidding it. Play with me here and do this thought experiment. If you buy 1,000 contracts at a price and you cause that price to go up 10 points, and then you sell 10,000 contracts, you've actually made money. You've made money to rally the price up, work the bid, spoof it higher, and when the retail's caught into this trade, start blowing out some positions on the offer side. Start working the offer side of the ladder. Sell, sell, sell. Let them absorb it. That way, by the time you get out, you've got an appreciation or rally that you started by getting long. That's what's happening in the market. These rallies are getting sold into quietly. There's a lot of buyers. There's everyone long. There's a lot of net long positions on the speculative side. Funds are all plowed into the long side. This Trump trade's exploded higher post-elections. Problem is, we're discounting a lot of risk. Look at China. For those of you that don't know about the China story yet, you're missing out. Go research right after this video what's going on in China right now with their debt. All right, nobody's talking about that. Last time it happened, there was a big sell-off. The exact same pattern starting to be displayed in China right now. All right, look at this relationship between Trump and Iran. All right, the Ayatollah's talking back. Trump's making threats. They're going back and forth. That's not good for oil prices. That's why oil prices continue to slide. Volatility shooting up. But if you just look at the VIX, you would be led to believe that there's absolutely no risk in this market. 11.3 is such a low VIX. There's absolutely no risk. The way the VIX moves, it stays low and explodes higher. So the way to protect yourself from this wealth transfer is start to sell some of your profits. For goodness sake, if you're long and you've made 80%, take some money. I don't understand how you expect to make money trading when you never want to pay yourself. Get paid. 2 words, very simple. Get paid. When you have profit, Sell some of your position. Who cares if it goes up? Let's say you sell here and you're going to say, well, George, I'm mad because I missed out on this rally. You didn't miss out on anything. You made money because you sold. What you did miss out on is the risk. Okay, stop thinking that when you miss out on a trade, you miss out on the opportunity. What you really missed out is on the risk of it failing and slapping you in the face. In hindsight, yeah, you did the wrong thing because it went up. But in hindsight, you did the right thing because you cut risk. All right, if you cut risk, it's always going to be beneficial for you in the long run. Right now, it may not work. It might keep rallying, but as long as you're cutting risk, you're positioned to be in this game for a long time, to ride these cycles up and down. Right now, what we need to do as traders for the long-term account is remove risk. Cut a little bit of this risk off. It's toppy. It's lofty. If you bought near the high, you could be in trouble. If you bought lower, you got in a position, you could sell a little bit of it and lock some profit. Trail the stop. Move this thing higher. Ride the waves, but don't say, here's the psychology of a trader. 90% of the retail guys that trade, they'll say, I'm up 5K on a position. Okay, maybe I'll ask you guys to answer this. I'm up 5K on a position. And then suddenly it drops and you're up 3K on a position. How does 90% of the trading market interpret that? As a 2K loss, right? They'll say, I lost 2K, darn it. You didn't lose SH something T. What you did was you gained 3K. Stop looking at the loss. Don't peg yourself to a high. You'll never sell the high, ever. That'll not happen. It'll happen a few times in your career, but don't expect for it to be a pattern. All right? Don't benchmark yourself to money. The money that's on the market you don't have in your pocket, it means nothing. Think about risk in this perspective. How much are you risking? Well, you're risking a loss of 3K of your profit, and below that, you're risking mental capital. The problem is traders get in at the top. They make some profit. It comes back down. They start to see this as a loss instead of a gain. Comes down, and then when it actually becomes a loss, they flip the psychology of, I'll hold it, it'll come back. You had your chance on the way down to take profit, and you didn't. So what I'm saying here is get paid. That's very important for tonight's webinar. Get paid. Be careful. I think there's a wealth transfer underway here. Can we continue to go higher? Yeah, we could be at 30,000 on the S&P by the end of tomorrow. I don't know. But what I do know is I have to remove my risk in the event that it drops. The upside is limited compared to what the downside is, especially when you look at how many people are already long in this market. All right. Wealth trade, I talked about it. It's over. I'm going to talk about a few last things, and then we'll call it a day. Today, we don't really have many economic news or any big events taking place other than the JOLTS report. Iran oil minister at 12:08 said something. All OPEC members agree that oil price should be $60 a barrel. Of course they're going to agree. I agree it should be $90 a barrel. That's like saying you produce bicycles, and the price of bicycles was at $100 just a couple of days ago, and now it's trading at $20. And you're producing bicycles, and you're going to say, I think the price of bicycles should be at $200. Yeah, no crap you think it should be at that price because you want to sell it there. So you guys have to condition yourself to learn these news. That's what Iran oil minister said at 12:08. I'm not buying it. I realize they're losing a lot of money as this sinks, but sell stops are coming. All right, we got that. We got no news. VIX is low. Markets are up, top, and high. Bonds are rallying, which means yields are coming down. Gold's been the best trade. I think I'm targeting about 1260 on gold in the next little bit. And from a seasonality perspective, you can see gold rallies. Gold rallies until about end of February, and then we start the cycle down at the beginning of March. So if you're long gold, hold it for another 1 to 2 weeks and start taking some profit and get out of that trade. There's a lot of money flowing in. Okay, commercial guys aren't shorting on big scale yet, but the dumb money's starting to climb in as well aboard this trade. So we'll ride them. We'll get a little bit higher. We'll take them to the 60s, and when everyone starts piling into gold, we'll sell it to them. All right, here it is. So we're long gold. We're short oil on our account. I looked to get long bonds. I missed that trade. I looked to get short oil. We got that. Nothing on equities. It's sideways. Also today in the equity market, we sat in a 3.5 point range for the most of the morning. And if you guys are day trading, you have to look at other markets as well. So in today's environment, I encourage you guys to trade multiple markets. Do the ES, do the CL, which is the oil contracts. Do the ZBs, which are the bonds. All right, do the NQs, which is NASDAQ. Study how they move in tandem when they move against each other. If NASDAQ's getting strong and the S&P is not yet, buy the ES. It's going to catch up to the NQ. All right, stop looking for one market and one strategy to make $1 million. It ain't going to happen. You got to put in the work. Okay, put in the work and join us for a free trial in our trading room today. We're up about $1,400. Showed all those trades live, up 1,400. Trading from 9:30 to 11:10. We traded oil. We traded the S&P 500. Traded a number of futures contracts, and our swing trading positions are up another $1,000 today. So it's doable. It's very doable. It's just not doable the way most people teach it to you. The game in 2017 is different. You want to learn how to actually participate in this market and make money? TradeProAcademy.com/free trial. Sign up for a 14-day unlimited free trial, and you can join our live trading room. I can't show it to you because there's a lot of discussion in there, but we talked about every single trade. We outlined when we're getting in, when we're getting out, why, how many contracts we bought. Boom, 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 boom. And I show the trade where I got in and out. I show my losing trades, my winning trades, good days, bad days, and the like. Take care, YouTube. Have a wonderful afternoon. Give us a shot. Try the 14-day free trial. We'd love to have you guys on board and in our live trading community. All the best. I'll see you there tomorrow. We start at 9:15 a.m. Eastern. Subscribers, hang tight. I want to show you some trades. I missed the trade, says Anatoly. Darn it. You guys made me miss a trade. What's the trade? Oh, I'm out of my trade. Look at that. I made some money while I was blabbing. Shorted these 91 halves. I had my limits in here, and then I just took my profit at 88 half. How about that? Because I had my limits all on my ladder. So I had about 260 on the ES. Now it's up to 562. So make that 1,417 now for the day. Thanks, Anatoly, for the heads up. You got me a little worried there. I was like, oh, what's going on? All right, YouTube, take care. Have a great day. Hopefully see you in the trading room. Subscribers, just hang tight here. I want to show you a few trade opportunities for the afternoon and what we got on our long-term portfolio. All the best. Take care, guys.